Are you struggling to find the best entry and exit points in trading? Want to trade like the big institutions? In this video, I'll break down fair value gaps, FVG, in smart money concepts, SMC, and show you how to use them like a pro. Make sure you watch till the end because I'll share a real-time trading example that you don't want to miss. Hit the like button and subscribe if you're serious about leveling up your trading skills. At the end of this video, you will have the answer to these questions. 0. What is SMC and its key components? 1. What is fair value gap, FVG? 2. How to identify FVG in charts? 3. How to use FVG for entry and exit? 4. How institutions use FVG to trap retail traders? 5. Live chart example and trading strategy. Okay, let's now begin with what is SMC. SMC, Smart Money Concepts, refers to a market structure analysis approach based on institutional trading behavior. It focuses on how smart money, banks, hedge funds, and institutional investors manipulate price movements to trap retail traders and create liquidity for their positions. Key components of SMC. 1. Market structure. Identifying trends, break of structure BOS, and market structure shifts MSS. Second order blocks, OB. Institutional buying or selling zones where price often reacts. 3. Fair value gaps, FVG. Price imbalances left after strong moves, acting as potential reversal or continuation zones. 4th, liquidity concepts. Understanding stop hunts, inducements, and liquidity grabs. 5. Mitigation blocks. Areas where smart money re-enters after clearing liquidity. 6. Breaker blocks. Former order blocks that failed and turned into new support or resistance zones. SMC is widely used in Forex, stocks, and crypto trading for precision entries and exits based on institutional price action. I will explain these topics in my upcoming video, or you can comment if you want video on specific topic. As for this video, our main agenda is to completely cover fair value gap from beginner to pro level. I mention these topics because I want you to know that these topics are also involved and have significant role in SMC. Remember, watching this video completely will give you clearer view of FVG. Therefore, watch complete video. So let's dive in. Let's go for the main agenda of this video, that is, what is fair value gap, FVG? A fair value gap, FVG, is an imbalance in price action caused by aggressive institutional buying or selling. It appears as a 3-candle pattern with a large gap between the first and third candle. Example: Candle 1, big bullish candle, strong buy pressure. Candle 2, smaller continuation candle. Candle 3, retracement candle that does not fully close the gap. This leaves a price imbalance, which smart money often fills before continuing the trend. How to identify FVG in charts? 1. Open TradingView and switch to a higher time frame, 1 hour, 4 hours, or daily. Let's make it 1 hour, and let me adjust the chart, okay? 2. Look for a strong imbalance in price with a large gap between candle wicks. Now we have to look for a gap between first and third candle. So let's find, here it is. 3. Mark the gap area with a rectangle. This is your FVG zone. 4. Wait for price to retrace into the FVG for a potential entry. Now on live charts, you need to wait for price to reach FVG. Once price reaches FVG, have patience, let the market play out. After the confirmation of closed candle, plan your position. Let's now look for some examples of FVG. Here, this is FVG. This is also FVG. This is again FVG. It is FVG. This too. It is FVG. Here this is FVG. One thing to notice here is, if candles doesn't takes the rejection from FVG, then it is invalid fair value gap, and as it does, then it is a valid fair value gap. Remember, whenever talking about FVG, we need to look for the candle body. That is, candle body must be closed below or above FVG. Here this is FVG. It is FVG. Here this is FVG. How to use FVG for entry and exit. Step-by-step entry strategy with real examples. Bullish FVG setup. Identify a bullish FVG in an uptrend. First, we have to look for uptrend in the market. Let's search it. Okay, here we can see it. This is uptrend. Now we have to look for big candles and need to find imbalance between them. Now here it is. Look, we've multiple FVG here. Wait for price to retrace into the gap. Look for confirmation like a bullish rejection candle. We've to wait for price to retrace this level. Since price comes near this, we've to wait for confirmation. Enter a buy trade, placing SL below the FVG zone. TP at the next key resistance or order block. Bearish FVG. Setup. Identify a bearish FVG in a downtrend. For bearish FVG, we've to look for downtrend in the market. Let's search it. Okay, here we got it. This is bearish FVG in downtrend. Now let's look for big red candles and find imbalance between them. Here it is. We've multiple FVG here. Wait for price to retest the gap from below. We've to wait for price to retrace this level. Since price comes near this, we've to wait for confirmation. If price rejects, enter a sell trade with SL above the FVG zone. TP at the next support level. Once it's confirmed, we have to enter the position using a take profit and stop loss. How institutions use FVG to trap retail traders. Smart money often uses FVGs to trap retail traders. Here's how. Market moves aggressively in one direction, creating an FVG. Retail traders FOMO in at the wrong price. Price retraces into the FVG, stopping them out before continuing the trend. Lesson. Always wait for confirmation before entering a trade. Now let's look for live chart example and trading strategy. Here's a perfect example of an FVG playing out exactly as expected. Here we can observe this chart pattern. This point is breakout most of the traders will enter. And here we've FVG. This is entry point. Here is stop loss. And this is our target profit. This is why patience and smart money concepts give you an edge over the market.